This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today we're talking about why a lender, for want of a union mortgage clause, got nothing after an arson-caused fire at the property that was the security for the loan, and why a loss payable clause limits recovery only if the insured can recover. And for the loss or failure to obtain a union mortgage clause, the lender got nothing. Following a fire that damaged a malt beverage store owned by A Maxon Company, LLC, AMC, Acuity Insurance Company asked the Supreme Court of South Dakota to determine a question of coverage under the terms of an insurance policy which listed Greg and Tammy Weatherspoon as additional loss payees. At trial, the Circuit Court granted Acuity's motion for judgment as a matter of law with respect to the Weatherspoons' counterclaim based upon the court's determination that the terms of the insurance policy prevented the Weatherspoons from recovering damages unless AMC successfully asserted a claim for coverage. In Acuity, a mutual insurance company versus A Maxon Company, LLC, and Greg and Tammy Weatherspoon, the Supreme Court of South Dakota on September 4, 2024, interpreted the policy wording and ruled in favor of the insurer. The jury ultimately determined that AMC principal Russell Maxon had intentionally started the fire, which in turn meant the coverage was excluded under AMC's policy. The Weatherspoons appealed, challenging the court's decision to grant the motion for judgment as a matter of law, as well as two evidentiary rulings made during trial. The Supreme Court affirmed the decision. The Weatherspoons originally owned and operated Teaspoons, a malt beverage store in McLaughlin, South Dakota. In July of 2017, they entered into a contract for deed to sell Teaspoons to Russell and Tracy Maxon. The Maxons purchased the property through their company, AMC, and began operating Teaspoons. Pursuant to the contract for deed, the Maxons were required to insure the property and list the Weatherspoons as, quote, loss payees, close quote. AMC purchased the property coverage under a commercial general liability insurance policy issued by Acuity in August of 2017 and listed the Weatherspoons as loss payees as called for in their contract. On April 15, 2018, the Teaspoons building was damaged by fire that originated in the basement. Acuity hired Chris Rallis to investigate the fire, who concluded that the fire was intentionally set and believed Russell had started it because Russell was the only person who had access to the building immediately before the fire. Rallis reasoned, though not noted in his investigation report, that Russell had a motive to start the fire because AMC was struggling financially. Beer distributors had stopped delivering to Teaspoons because the Maxons had written bad checks, and Russell had supplied Teaspoons with inventory by purchasing beer from a retail source. Special Agent Derek Hill of the Bureau of Alcohol, Tobacco, and Firearms also conducted an investigation and determined the fire was intentionally started by Russell. Following the fire, the Weatherspoons filed a proof of loss with Acuity in an effort to claim damages relating to the Teaspoons fire. Acuity denied the claim, reasoning that the Weatherspoons' ability to collect as loss payees were dependent on whether AMC could make a compensable claim, and after Acuity denied the Weatherspoons' claims, it sued for declaratory judgment, naming the Weatherspoons and AMC as defendants. The case was tried to a jury. Acuity presented the testimony of Special Agent Hill and via videotape trial deposition, and Special Agent Hill testified that he is a certified fire investigator and related his training, education, and experience regarding fire investigation. He's also a federal law enforcement agent. Special Agent Hill was able to determine that the fire had started in the basement and had originated in multiple locations. He also found plastic water bottles in the basement that contained gasoline. Following his investigation, Special Agent Hill determined that the fire had been intentionally started, and he also believed Russell had been responsible because there was nobody else present in the building before the fire started. Acuity's fire investigator, Rallis, testified he spoke with Russell, who said that he had been in the building doing laundry in the basement before the fire started, that there were multiple points of origin for the fire, starting near the back door, down the stairway, and into the basement area, and throughout the basement area. Rallis also determined the fire started and was spread using a trailer and booster technique. Rallis concluded the fire was intentionally started, and Rallis also believed Russell had a financial motive to start the fire. Following its deliberation, the jury returned a verdict in which 10 of the 12 jurors found it was more likely than not that Russell intentionally started the fire. The Weatherspoons are not parties to the AMC Acuity contract. They are lost payees whose ability to assert a claim is governed by a key provision of the contract in an endorsement entitled Loss Payable Clauses. The Loss Payable Clause listed in the schedule as the applicable clause provides as follows, quote, "We adjust losses with you, and B, pay any claim for loss or damage jointly to you and the loss payee as interest may appear." The circuit court determined that jointly, as used in paragraph 1B, restricted the Weatherspoons' ability to collect to the extent that AMC could collect. The loss payable clause only permits payment for loss jointly between the insured and the loss payee. As loss payees, the Weatherspoons were only permitted to collect if and when AMC collected, and consequently the circuit court did not err when it granted Acuity's motion for judgment as a matter of law. The jury had returned a verdict that found Russell had intentionally started the fire at Teaspoon on April 15, 2018, and pursuant to the dishonesty or criminal acts exclusion within the insurance contract, AMC was therefore precluded from collecting lost damages. The circuit court's decisions regarding judgment as a matter of law were not in error and were therefore affirmed. The Weatherspoons' ability to recover under the AMC Acuity policy as loss payees depended on AMC's ability to recover, and because the jury found that Russell intentionally started the fire, AMC was precluded from recovering any benefits, and therefore Acuity could and did properly deny the Weatherspoons' claim for loss damages. The reason, in my opinion, for Weatherspoons' loss and why it recovered nothing is because their contract of sale only required AMC to list them as loss payees, rather than as lenders under a union mortgage clause, the old ISO Form 438 BFU, which allows the lender to collect even if the named insured may not, because of fraud or other intentional act, while the loss payee form, required by their contract, only allows them to collect jointly with the named insured. Had their contract required a union mortgage clause, they would have been indemnified. This video was adapted from my blog, Zalma on Insurance, which is available free to anyone who clicks on the URL zalma.com/blog. You can subscribe to the blog, and if you do, you'll receive notice of every blog posting, usually 5, sometimes 6 a week, and you'll gain access to the more than 4,850 blog postings. You can also subscribe to the videos, hundreds of which are available on YouTube and rumble.com. They're also free. And if you do, I'd appreciate it if you click on the like button on YouTube and the thumbs up button on rumble.com. Please tell your friends and colleagues about this blog and the videos so that they too can subscribe to the blog and the videos. And if you're interested in obtaining further information about insurance, insurance claims, insurance law, and insurance fraud, please consider subscribing for a very small fee to my Substack publication. Thank you for your attention.